This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com. Interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Wild week. We saw ups and big slides down. But now that the nerve-wracking week is over, what happens next?
Sentence reduced. He was the man at the center of one of the most notorious financial scandals in U.S. history. And today, the former CEO of Enron was told he'll get out of jail early.
Age of insourcing. After years of seeing jobs go overseas, companies like Google and Apple are reversing the trend and keeping some jobs right here in the U.S. All that and more tonight on Nightly Business Report for Friday, June 21st.
Good evening, everyone, and welcome. I'm Tyler Matheson. Sue Herrera joins me tonight. Susie Garrett has the evening off. Well, you couldn't really call it a comeback day, not after Thursday's 350-point Dow infarction, but the patient was stabilized despite some wild swings on a so-called quadruple witching day when certain options and futures contracts expire. On a heavy volume, the Dow rocked and rolled and finished 41 points higher at 14,799. The NASDAQ was dragged lower, especially by Oracle, which fell 9% on an earnings miss last quarter, reported yesterday. NASDAQ dipped more than 7 points to 3357. The S&P 500 gained a mere 4 points to 1592. The yield on the benchmark 10-year Treasury note hitting 2.5%, the highest in nearly 2 years. Overall, the week answered some questions. No, stocks don't always go up. Yes, the Fed will stop buying bonds sometimes, but it also left some queries hanging in the winds. For most of us, thoughts about our investments this week were unnerving, to say the least.
There's just a lot of uncertainty out there.
You know, if you take a few bruises, you just got to play your best game. And what do you do? That's a stock market. That's how it works.
At the start of the week, a two-day run-up on the Dow and the S&P put May's record highs back in sight. Then came Wednesday and a 200-point drop after Federal Reserve Chairman Ben Bernanke put investors on notice with word the Fed may trim its bond buying before the end of the year and end it not long after that.
We would continue to reduce the pace of purchases in measured steps through the first half of next year, ending purchases around mid-year.
With the end of the Fed's asset buying program in sight, stocks dropped another 300 points Thursday before stabilizing today. Of course, that plan depends on whether the economy continues to improve. Gone in 2 days were the last 2 months of gains in the stock market. For the year, though, stocks are still up more than 12%, even if a lot of us still have doubts about the health of the economy.
The unemployment needs to be fixed. It's horrible. The housing market still isn't really good.
I'm worried about the economy.
So what's next? The year is almost halfway done. Corporate profit reports will come soon. Even experts are nervous. That housing recovery? Well, mortgage rates are inching up.
Everyone's getting a little spooked.
That these stocks are going to be very volatile until we get some clarity around what the Fed's doing.
There's no shortage of opinions, even inside the Fed itself. St. Louis Fed President Jim Bullard, still worried about the economy, today said the announcement of a bond buying pullback was, quote, inappropriately timed. Others say Bernanke and the Fed got just what they wanted.
I think the Fed was purposely trying to take some air out of the housing market and the stock market. They don't want the stock market going up 20% every 6 months. They don't want housing prices rising 10+% year over year for the next 5 years.
But others took Bernanke at his word that the economy is recovering and a policy change is just a short-term shock to the system.
We are babying, over-medicating this economy. This economy is like a 12-year-old sitting on a bicycle with training wheels. It can cycle forward on its own.
Where are you going to put your money right now? In cash? I don't think so. Are you going to put it into 30-year? I don't have an interest in having that duration risk. I'm going to put it in equities.
And with the quarter ending next week, market watchers say they expect professional investors to buy blue chips to dress up their portfolios.
Some burned investors in bankrupt energy giant Enron may have a little bit more to be upset about today. A shortened prison sentence for its jailed one-time chief executive, Jeffrey Skilling. Scott Cohn was in the courtroom for this controversial decision today, and he joins us live from Houston. So, Scott, why the more lenient resentencing, and perhaps more importantly, why right now?
Well, in a sense, Sue, it makes sense for a guy who was in charge of an energy trading company. This was basically a trade-off. A federal appeals court had already said that the original sentence, 24 years, was too harsh. They said it should be more like 15 or 16 years. Skilling wasn't willing to settle for that initially. He was going to charge that the government had committed misconduct in prosecuting the case. That would have dragged it all out for a whole lot longer. So ultimately, the government and Skilling came to this agreement where Skilling would drop all of his remaining appeals. $40 million would be returned to the investors. The convictions would stand, but he would get out of prison early. Basically, 14 years with time out for good behavior. He'll be out in about 11 or in 2017.
Give us a sense, Scott, if you would, of the atmosphere in the courtroom today, and how did Skilling look? You've been working this story for years.
Skilling is 59 years old, and he looks every bit of that. He's grown a beard since he's been in prison. You know, he looks like he's aged somewhat. He was in prison garb, in handcuffs initially, then they took them off. The courtroom was packed with Skilling supporters. The judge said that 200 people had written in support of Jeff Skilling. Among the people in the courtroom, Skilling's family, his wife Rebecca, members of Ken Lay's family. Remember, Ken Lay passed away in 2006 shortly after he was convicted, then those convictions wiped out. One victim spoke for those who were victimized by the scandal, Diana Peters, a former Enron employee, who said that Skilling betrayed the employee's trust.
Talk more about that, Scott. What exactly does this mean for Enron's victims?
Well, for one thing, they will get this $40 million, but that's been sort of held in escrow since the trial in 2006. All of that money will go to the victims. Now, that's a pittance in terms of the $60 billion or so that was lost, and there have been some big settlements on the order of about $7 billion, mainly with some of the banks that were involved. But they will get some money back, and that's something that the Justice Department is emphasizing in all of this, that they didn't come down that much from what the appeals court wanted. People will get their money back, and most important, they say, Skilling will not be able to challenge his convictions.
Scott Cohn, an honorary citizen of Houston after all the time you spent down there. Scott, have a good weekend. Good news about jobs to tell you about. Unemployment rates fell in about half of all states in May, led by big declines on the jobless rolls in California, West Virginia, New York, and Hawaii. California's unemployment rate is now 8.6%, higher than the national average, but it is at its lowest in 5 years. Overall, North Dakota has the lowest rate of unemployment, 3.2%. Nevada, the highest, at 9.5%. The rates rose in 17 states and remained the same in 8 more.
And there was also good news about auto sales, but this time used auto sales. CarMax, the nation's biggest used car dealership chain with 120 stores nationwide, reported a 21% rise in profits last quarter on a 22% jump in sales. Prices on those used cars were also up about 1% from a year ago.
If you're flying instead of driving, there may be some relief on board that plane. The Federal Aviation Administration is expected to relax the ban on using some personal electronic devices during taxiing, takeoffs, and landings, and low-altitude flying. The ban on making cell phone calls, however, will likely remain in effect, but passengers may soon be allowed to use e-readers, tablets, and MP3 players without admonishment from airline staff. The actor Alec Baldwin, who was famously thrown off an American Airlines flight in 2011 for refusing to stop playing the game Words with Friends on his smartphone during takeoff, tweeted this reaction: "If you're flying first class on American Air, I'd still apply an extra measure of restraint."
Well, the easing back of those airline rules may have turned the initial public stock offering for GoGo into more of a no-no. Shares of the airline internet service provider tumbled on their first day of trading today. After pricing last night at $17 a share, GoGo shares closed nearly 6% lower at exactly $16 apiece.
Another big tech company is on the move. The company that makes smartphones for Google and Mac Pros for Apple is making efforts to move manufacturing back to the U.S. It's called onshoring, and John Ford has our story tonight.
It's become an article of faith in America these days. Manufacturing jobs that have gone overseas can't come back. American workers cost too much and don't have the cutting-edge skills to build the latest gadgets. But what if that's all wrong? In just the past month, Apple and Google had both announced products they plan to make here. Apple's is a high-end computer.
It is designed by brilliant engineers in California and assembled here in the USA.
It's a fantastic device that we want to get into the hands of as many people as we can.
A risky new smartphone we haven't seen yet.
For Google, it's a major gamble. If it succeeds, Made in America is a major selling point for a cutting-edge new phone. If it fails, American dreams and real American jobs are at stake.
Well, certainly it will boost morale. I mean, I think that a lot of people for a long time were kind of economic determinists. They assumed that our jobs, particularly our low-skill jobs, were all going to go abroad to the lowest wage countries. And that was never wholly the case. But when manufacturing does start coming back, people's hopes will get up.
Flextronics, the contract manufacturer, will be building both Apple's Mac Pro and Google's Motorola X phone, both due later this year. Why make them in the U.S.? The cost of labor is rising in countries like China and Malaysia, for one. And as innovators like Tesla have shown, when there's a brand new high-margin product that needs close attention, sometimes it's worth it to have it crafted close to home.
We're seeing a lot of work move into places like Texas, where we put up the Moto X factory, and as well into North Carolina, South Carolina. In these kind of places, the governments are very aggressive at improving regulation so it's more pro-business, and at the same time keeping taxes down and really working to stimulate jobs.
It'll probably take years for this story to play out, for us to see whether tech really can bring American manufacturing jobs back long term. But this initial chapter is key. If names as big as Apple and Google can't succeed at this, chances are the others won't be able to either. For Nightly Business Report, I'm John Fort.
Coming up, how big American companies are taking advantage of an even bigger trend, urbanization, especially in China. But first, a look at some of the best performing stocks on the S&P this week. Violent protests continue to rock the streets of Brazil's biggest cities for the second week running, as an estimated 1 million people rallied against the government for raising prices on public service last night. Some cities even canceled the transit fare hikes that set off those demonstrations a week ago. But that didn't stop the protests. More unrest is expected tonight in Rio de Janeiro, Sao Paulo, and other major cities.
2 U.S. senators say a Chinese company's purchase of Smithfield Foods is, quote, difficult to square with the Chinese government's restrictions on U.S. pork and beef exports. Senators Max Baucus and Orrin Hatch, a Democrat and a Republican, say the interests of U.S. farmers and ranchers must be protected, calling for a full review of Shengwei Group's planned acquisition of Smithfield. That's the world's largest pork producer.
And in China, the government is pushing ahead with a sweeping plan to move millions of rural residents into more populated areas. And this growth in urbanization has not gone unnoticed by some of America's biggest companies. Eunice Yoon reports.
All over the world, people are heading to the cities. Nowhere is that more true than in China. By 2030, 1 in 8 people on the planet will live in a Chinese city. That's good for companies like Honeywell.
The wealth of these people is increasing at a tremendous speed.
Honeywell is betting big on China's plans to build up its cities. The American industrial giant has opened new factories like this one in the Midwestern city of Chongqing, expecting its urbanization expertise in the U.S. and Europe to translate here.
Urbanization is really, if you look at it, it's a building of the mega movement. It's not in one location, but all across China. New towns, new subways, new trains, new planes, new hospitals, and they are all fall within the Honeywell business scope.
If China wasn't urbanizing at this fast a pace, would your growth be as strong?
Of course not.
Honeywell is making and selling brake pads here. It's targeting sales growth about double the country's growth rate, which is currently above 7%. To build its cities, China needs everything from Australian iron ore for steel beams to American bulldozers.
At shopping plazas like this one, you could see all sorts of international brands. With more and more Chinese moving into the cities, companies like Starbucks, H&M, and Gucci can reach more consumers here than ever before.
They create jobs for us in China, but also create jobs for U.S. Many of these product know-how is in the foreign countries. As in the process of localization, you actually create more jobs for these foreign countries, whether it's the U.S. and Germany or in UK. So everybody benefit.
Welcome news with economies so weak back at home. For Nightly Business Report, I'm Eunice Yoon.
And tonight in Market Focus, some bargain hunting on the day after the big Dow dipper. Bristol-Myers gaining back most of its Thursday loss as investors cheered FDA labeling approval for a leukemia treatment. Shares of Bristol-Myers up more than 2.5% on above average volume. It closed at $45.73. Dish Network, meanwhile, touching a new 5-year high as it abandoned its efforts to acquire Sprint. Dish took on more than $2.6 billion in debt and interest to finance the Sprint deal. They're not going to be spending it now. That didn't matter to the market today as Dish Network gained more than 3% to close at $40.41. Dish up 7% since it launched that Sprint bid back in April.
Archer Daniels Midland gained after saying that it's in talks to sell its cocoa business, about 4% of its overall sales. ADM shares were up almost 1.5%, closing at $33.09. And Facebook also gained today on an upgrade to buy from neutral over at UBS. And some astonishing stats on Instagram video. 1 year of video was uploaded in the first 8 hours. In other words, it would take a year to watch all of those videos. And remember, they're only 15 seconds long. Facebook acquired Instagram in September of 2012, and in today's trade, shares tacked on more than 2.5%, closing at $24.53.
And time now to turn our attention to this week's Market Monitor guest, who says she's positive on equities, both over the short and the long term. She's Judy Sarian, Portfolio Manager with Eaton Vance. Judy, welcome. What a week, great week to have you here with us. Explain why you think this is not not a fatally wounded bull market.
Well, I'm very happy to be here, Tyler. I think that the move by the Fed and the comments by Bernanke indicate that the economy is growing. It's not growing too rapidly. It's not growing too slowly. It's just right. And I think that is really the key underpin of the market. So we're very positive about the market, both near term and long term. The Fed is basically on the track that they had set. There's really nothing new in what they said.
Judy, though, we did see a lot of volatility this week, and we've seen interest rates move quite a bit higher than they were a couple of weeks ago. Does that worry you at all? I mean, it's good for savers, certainly, but does it worry you about the market's ability to move forward?
The interest rate level has moved up. It was pretty dramatic in the last couple of weeks, but at this current level, the 10-year Treasury at 2.5%, that's still a very reasonable interest rate. I believe the economy can grow with that rate. It's not a problem for the housing market, and of course the housing market is key for the growth in the economy, but housing is still extremely affordable at record rates in terms of affordability. It would take rates going much higher before we saw that really affect or impact the housing market.
I think our viewers have their pencils ready, Judy, for a couple of your stock picks. And a couple of stocks on your list this week are banks, one big, one somewhat smaller. Let's start with the big one, which is Citigroup.
Okay, well, at Eaton Vance, we focus on fundamentals, and the fundamentals are very positive for Citigroup. There are several positive factors favoring Citigroup. There's an improvement in the capital markets activity. Also, Citigroup benefits quite a bit from the residential real estate market. In fact, they are going to be releasing $8.5 billion in reserves from the North American mortgage business. So that will be a very strong tailwind to earnings looking out this year. On top of that, the valuation is very attractive. The stock is selling at only 63% of book, a low PE ratio, and I think the stock can easily get up to book value.
I would assume housing would also help your next pick, which is Regions.
Absolutely. Regions Financial is a regional bank. About 55% of their portfolio is in real estate loans. So they definitely benefit very much so from the residential real estate market and the pickup in the real estate market. They're also selling at a very attractive valuation. They have a reasonable yield, and we're expecting very strong dividend growth out of regionals as well.
Let's see if we can squeeze in two more very quickly, 15 seconds for each. One is Sanofi, and the other is Philips, 66.
Okay, on Sanofi, it's a French-based company, great pharmaceutical company, very strong position in the diabetes marketplace. They've got one of the strong insulin drugs, and that business is doing very well. They've also got some very strong positions in the vaccine business. And on Philips, they became independent about a year ago from ConocoPhillips. They're in the downstream energy business, benefiting from several trends in energy. Strong free cash flow, over $4 billion we project this year, and potential to grow that dividend at a very nice clip. Very inexpensive stock, selling at about a 7 multiple on PE. So great stock.
I assume, Judy, that your funds own all of these companies, or your company does. Any other disclosures?
No, that would be the primary disclosure.
All right, Judy, thank you very much. Judy Sarian is portfolio manager with Eaton Vance. And still ahead, after falling to the bottom of the pizza food chain, we'll show you how Domino's turned things around and delivered for shareholders. But first, a look at some of the worst performing stocks on the S&P this week. Starbucks is raising its prices. The Java giant plans to jack up prices on some of its drinks, but only by an average of 1%. For some markets, the company says it'll be the first price hike in about 2 years. Even though coffee bean prices have been dropping, Starbucks blames the increase on higher rents, labor costs, and rising prices for things like milk and sugar.
And those rising material costs and changing consumer tastes are some of the biggest challenges for eateries. And there's one chain that's worked very hard to figure out what its customers want and has succeeded, delivering for both diners and investors. Jackie DeAngelis has the latest in NBR's series on comeback companies with a look at pizza giant Domino's.
In 2009, Domino's ranked at the bottom of a consumer survey on pizza taste preferences, tied with Chuck E. Cheese's. Particularly galling for the company that had virtually invented the pizza delivery chain business. The situation was desperate.
The combination of poor results for a couple of years in our domestic business, and then some surveys coming out that were not particularly kind to us and the quality of our pizza. It sent us into a room one day, and we made the decision that it was time to really fix this.
But now, 4 years later, Domino's is at the top of the latest rankings, and people love their pizza.
Their food is really delicious. It's really savoring. It's really fills in your taste buds.
Domino's is a good place to come because it's cheap and you get a lot of food for money, and they have a lot of good deals.
How did Domino's do it? First, they fixed the pizza.
Brought the team in and said, look, everything is on the table. You can change anything. And we just simply want to have the best pizza out there.
Then they streamlined the business, adding online ordering for convenience and to drive sales.
Digital orders have been growing about 5% a year as a mix of our total sales. So we're now in the 35 to 40% range. Customer satisfaction is higher, order accuracy is higher. The ticket on those orders is a little bit higher. Our labor cost is slightly lower. So everything's better.
Those who invested in Domino's Pizza have seen a sweet return. After hitting a low of $3.03 a share in November of 2008, the stock has run up nearly 1,800%. The turnaround has been good for investors and also employees.
Over 90% of our franchisees in the U.S. started as hourly workers in our stores, either as delivery drivers or customer service representatives. They worked their way up through to become a manager and then bought their first store.
But there are challenges ahead for Domino's. One is growing its international business, especially in China, to keep up with the competition.
I think one of the ways that Domino's can succeed in China is having a broad menu approach, maybe specializing in chicken, which is a very popular fast food staple in China.
So does a stock that has doubled since last year at this time still have room to run?
I don't think it moves much higher right now. I think the challenge that Domino's faces in the next 12 months, it will be up against some tougher year-over-year comparisons, particularly in the U.S. Coming off the introduction of pan pizza very late in the third quarter.
For Nightly Business Report, I'm Jackie DeAngelis.
And finally tonight, an appropriate end of what must inevitably be called a roller coaster week on Wall Street, and it comes just in time for the start of summer. Take a look at the Full Throttle roller coaster, debuting today at Six Flags Magic Mountain Amusement Park outside Los Angeles. I bet, Sue, you grew up going there.
I went to Magic
It
Mountain.
is the world's tallest and fastest looping roller coaster, top speed 70 miles per hour through a 160-foot-high loop.
Mercifully, they didn't have that when I went to Magic Mountain. That's Nightly Business Report for tonight. I'm Sue Herrera in for Susie Garrett. Thanks for joining us.
And I'm Tyler Mathis. And have a great weekend, everybody. We'll see you back here Monday night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Tyler Mathisen with a Nightly Business Report news brief. After Thursday's 350-point plunge in the Dow, the market stabilized today, but the major averages ended the week lower. On heavy volume, the Dow closed 41 points higher. The Nasdaq was down by 7, dragged lower by Oracle shares, which fell 9% on an earnings miss. The S&P 500 up 4. The yield on the benchmark 10-year Treasury note touched 2.5%. That's the highest in nearly 2 years. Unemployment rates fell in half of all states in May. North Dakota has the lowest, 3.2%. And the jailed former Enron CEO, Jeff Skilling, had his 24-year prison sentence for fraud reduced to 14 years. Starbucks plans to raise prices on some of its drinks by about 1%. And tune in to Nightly Business Report right here on your public television station.